JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 17th of February 2022. So yep, welcome everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which is also updated on a daily basis. So yep, check us out here on jfdbank.com and click on the research tab right there on the top. So now then, let's have a look at what's happening here with the markets. And yeah, first of all, excuse me, I want to start off with Nikkei 225. So the index did drift initially a little bit higher, but quickly kind of reversed near that 21-day EMA and yep, moved to the downside. But as you can see, this 27,085 level somehow did its job and provided good support. That level is the low of the 7th of February. So for now, let's say I'm still observing this one, because in a way what I need here is I need to see a nice good push above that 21-day EMA and a push above that 27,594 zone right here, just to be a little bit maybe more interested with the upside scenario. For the downside, I need to see a drop below this hurdle, this highlighted one that I mentioned before, near the 26,955 level, and then yeah, maybe we could start looking at some lower levels. But even then, maybe, just maybe, we'll see if this upside line plays out somehow. If it does, then yes, all this could come in nicely here with this idea for the downside. Yep, Evo, I can see you in the chat room there. Good morning to you too. I hope you're having a wonderful start of the day, and I hope everybody else who's joining in is having a wonderful start of the day. So yeah, jumping into Shanghai Composite, guys, very quickly on that one. So we did get a nice push higher initially, and yeah, we broke this downside line, but kind of still failed to remain above it. So in other words, for now, I'm just still waiting for this one to kind of do something a little bit more than this. Yeah, if we're looking for some upside, guys, we need to see that good move above that downside line, above that 21-day EMA, and then yeah, potentially more buyers could join in here. For the downside, well, I would actually, this is where I'm going to redraw this level, and I'm going to put it right there, the low of the 14th of February, near the 3,415 zone. I would prefer to see a drop below that hurdle. That's the lowest point of this week, the current lowest point of this week. If we drop below this, then yes, there could be a chance for this one to drift lower. If it continues to trade somewhere around this area, I'll take just a bit of a neutral stand and just observe the price action. So now jumping into the Dax, the German index, and yeah, yesterday initially we saw a nice good move higher. Everything seemed to be like working out nicely, but then of course the whole kind of and then we start seeing media reports. I mean, with the ongoing tensions, let's put it this way. So yeah, I mean, again, this is a lot of driven is by media, of course. The Fed yesterday came out, well, tried to kind of, you know, put a bit of a positive spin on everything, basically saying that yes, interest rates will get increased, but maybe not at a such an aggressive pace. So we saw the markets yesterday recovering sharply, and yeah, especially the US ones. Initially they were selling off, but they managed to then to quickly kind of and you know, recover all the losses and end the day flat. So but here, for example, right now on the German index, the cash index is currently sitting at around 15,350 zone, so somewhere basically not far from where it closed yesterday. But in order for me to, let's say, go for some higher levels on this one, I need to see a break of this downside line taken from the high of the 2nd of February. But then the only issue here that I have is that I said before that I'll still, me personally, to get a little bit more comfortable, for me to get a little bit more comfortable with the upside, I need to see a push above this barrier. This is roughly the midpoint of this little range that we are having here. So yeah, potentially more buyers could get attracted if we do break this barrier. For now, I'm just observing this one because I'm not really, you know, getting very bearish on this as well, because maybe this little move lower here was seen as a temporary correction before another possible leg of buying. So that's why let's not get way too pessimistic yet. For me, the pessimism could come in if we do drop below that psychological 15,000 mark, and which is kind of the lower side of this wide range. So keep that in mind, and let's see how all this is going to play out. This is where I'm leaning to Nasdaq right now. So Nasdaq yesterday closed fractionally in the red. However, the day started not well. The trading session did start not very well. Initially we saw those drops. We saw the index declining, and yeah, but then, like I said, the Fed did help out a little bit here, and we saw a nice good reversal, a nice good push back to the upside. So for now, I would say let's be very careful. Let's be very cautious, and if you want to go for the upside here, guys, well, keep your eyes at least. Let me just redraw this level. Keep your eyes on the high of yesterday near the 14,648 zone, roughly around here. And if we do climb above this, then yes, we could go for some higher levels, guys. I mean, but within the falling channel pattern. This is what I have drawn previously. I'm keeping an eye on this, so I want to see if this is all gonna play out nicely or not here. But yeah, I'm keeping an eye on this barrier, the high of yesterday. If we do climb above it, I'll aim for the upper side of the falling channel here, and then I'll take it from there. Of course, if we do break it, then we'll go higher, but we could go higher, but yeah, let's talk about that a little bit later. With the indices, I'm a little bit more careful than like with the pairs. So yeah, let's see how this is going to play out. For the downside, I need to see actually a drop somewhere below this level, the lowest point of October, which is around that 14,385 zone. So keep that in mind. Now then, going further here, going into the S&P 500, and basically here we also had a nice beautiful reversal. The index closed fractionally in the green, but still below this downside line taken from the high of the 4th of January. Now, if you take a look at the cash index, we'll see that the price is sitting at around 4,460 zone, so something like that. And yeah, this is basically below yesterday's close, slightly below, but not significantly. But we're still above this hurdle, this one right here, the 4,453 zone. I talked about that one. So in other words, for now, let's see how all this is going to play out. A nice good break of this downside line may attract a few more buyers. Break of this downside line, yep, and also a push above that 21-day EMA could be something that might interest a few more buyers here. However, if you're, as I mentioned before, keeping an eye on this idea here of maybe seeing a possible range. So far, we did rebound from this area. Can we go towards the upper side of this range? Well, let's wait and see. For now, I'm like I said, I'm very careful here because we do have this downside line which we need to overcome still, and a bunch of obstacles like the 21-day EMA and the 100-day EMA. Now then, jumping into Dxy Dollar Index very quickly on that one. Yesterday we saw a bit of a decline, and to be honest, at the moment it's not really interesting because it's oscillating around that 21-day EMA. So for now, I would say it's a tricky one here. So we are kind of stuck here in between these two upside lines and this barrier right here, this 96.30 zone. So until we get a nice good breakout here through this 96.30, I'm not really, like I said, I'm not really touching the upside. For the downside, I'm not touching the downside scenario until we see a breakthrough both of these tentative upside lines, and maybe a drop below that 95.14 zone could kind of strengthen the downside scenario idea. Gold, beautiful reversal. So everything kind of in line with everything here. So I talked about this idea where I said that keep your eyes on this 1853 or 1848 zone, because these might provide good support, and well, we did get a nice good support around here. For me, for the downside, I needed to see a drop below this 1830 territory, approximately around here, because at the same time we would be maybe placed below that 21-day EMA. But again, this is what we got here. We got a nice push. So first of all, getting rid of this upper side of the rising channel idea and no longer valid. Now what's key on my mind is, of course, this 1877 zone, so which is the highest point of November. Now, can we overcome that? Well, let's wait and see, because at the moment, yes, everything's kind of leaning towards the upside, but the fact that we kind of already had a good run in a very short period of time, a good run to the upside, quite a steep one, that's what's keeping us a little bit on the sidelines here for now. I need to see that good break here, and I would like to see the body of the daily candle staying above this hurdle in order to go for some higher levels. The WTI oil here, beautiful reversal. Yesterday we dropped to the downside. We moved nicely lower, and basically, I mean, we broke the idea here. I mean, the lower side of the rising wedge, that idea that I had, we broke the lower side of it. But today, as you can see, we're quickly kind of picking up the upside scenario again. So in other words, let's see how this is going to play out, because at the moment I'm keeping a close eye on this 93.14 level, because I talked about it, and I said that if we do climb above this area, we'll go for some higher levels. We could go for some higher levels, but at the moment we're getting a nice little hold up here. So that's kind of making me worry a little bit in terms of the upside. That's in order for, like I said, this is a little bit this is a little bit tricky here. And first of all, we can get rid of course, this rising wedge idea. It's no longer valid. And to be honest, all this is just becoming very messy. And I would still probably stick to the downside if we will get a drop. I will stick to the downside if we get a drop below this area right there, this 88.82 zone. At the same time, we would drop below the 21-day EMA, and potentially more sellers could join in. But at this point, like I said, I'm not really liking it. If it does climb and stay above the 93.14 level right here, then yes, I'll slowly aim for slightly higher levels. But of course, we could find some resistance near these barriers that we recently have tested. So just be very careful with oil right now, guys. I mean, it's not ideal. Ethereum, jumping into Ethereum very quickly. Ethereum is correcting a little bit to the downside. However, everything's still in line with the upside scenario. So even if we do go for a bit of a larger correction here, I'm gonna be very careful, because I mean, we do have this upside line which could still play out. If it does, then another push higher could be possible. But if you're a little bit on the careful side and cautious side, what you can do here is wait for a push above that 3,272 territory right there, and then we could go for some higher levels. AUD USD. So this morning we got the Australian employment report. It came out okay, I would say. I'm not really, let's say, on the negative side, but not really, let's say, on the too positive side. I mean, initially the unemployment rate came out the same as previous at 4.2, which is great. I mean, of course, participation rate increased by 0.1%. From the previous, coming out at 66.2. The employment change, yes, it was positive at 12.9k. However, the expectation was for a minus 15k. However, the previous one, for example, was at 64.8. So there is a bit of a decline. So quite a significant one. So we're looking at this picture here on AUD USD. I mean, if this pair probably will remain more affected by by DXY and the general kind of sentiment in the market. If the equities start pushing, higher again, then well, we could see AUD USD drifting nicely to the upside, maybe towards this 100-day EMA or even this 0.7849 zone. For the downside, I still need to see a drop below this hurdle, below that 0.7170 territory, 0.7110 zone right here, and then we could go for the downside. Let me get rid of this downside line, probably no longer needed, and instead I'm going to reuse it, and I'm going to draw a nice good trend line like this here. And if we do drop below this upside line, and we do drop below that 0.7110 zone, then yeah, we could consider maybe a bit of a move to the downside. USD CHF very quickly on that one, and here we broke the upside line. We broke below this 0.9222 zone. However, we are struggling to remain below it. Now, if we do get another good drop below this hurdle, then yes, I'll go for the downside, and I'll aim for that 0.9178 zone, which is marked by the current lowest point of February, and then so on and so on, of course. But for the upside, what I need to see here is the push back above this upside line and a push above this 0.9275 level right there. And then yeah, we could maybe consider a bit of a move to the upside. GBP CAD very quickly now. This one's quite interesting, as you can see, and yeah, it seems like we could be forming here a nice ascending triangle pattern. So yeah, we need to see a breakout here, a breakout above the this 1.7292 level. If we do get that, then we'll go for some higher levels. If we don't, I will remain neutral for now, because for me, for the downside, I need to see maybe a drop somewhere below this area right there, this 1.7133 zone, and then yeah, we could go for some lower levels. For now, I'm watching this this highlighted barrier here very closely. If we break it and stay above it, then yes, I will go for some higher levels. GBP USD, so also looking quite positive, I would say. We climbed above this 1.3572 level. I talked about this, guys, but what I said before is that if we do push above this hurdle, yes, we could go for some higher levels, but we do have a bunch of obstacles right there. So ideal scenario is still to wait maybe for a push above the 1.3644 level, somewhere around here, just to be a little bit more on the safe side. For now, yes, I'm cautiously bullish, because it could still, reverse back down, and it could still kind of, drift back to the upside line. So keep that in mind. Euro against the South African Rand, just a quick update. So looking at this picture here, keeping an eye on this 17 territory, and yeah, so far it's holding. Can it continue holding? Well, that's a good question, because for now, I would say let's wait and see. The only issue here is that try not to maybe predict it too much in this scenario here, on this particular pair, because it could still, we did have a decent decline, so maybe a bit of a retracement could be possible. So let's say something like this could be an idea, and yeah, I mean, if it does rebound. I mean, we could go maybe for that 23.6 or the 32.8% retracement on the 38.2% retracement on the Fibonacci. But of course, looking at this, I'm leaning a little bit more towards the downside. I would prefer to see a nice good drop below the 17 territory. But okay, I mean, it doesn't really always do what we want it to do. So that's why we will, if we do drop below this hurdle, then yes, it could open the door towards lower levels. EuroCAD very quickly on this one, and it's quite a messy one. First of all, I mean, I haven't looked at this one for quite a while, but in general, what you can see here is that after we got a nice push to the upside, you can see that the 200-day EMA provided a strong area of resistance. Now, can it continue doing so? Well, again, that's probably time will tell. But what we can only try to, think here and see what we can do with it. On one hand, it seems like that we are, yes, we are drifting to the downside. On the other hand, maybe we're actually forming a bullish flag here. But for that idea, it would be a little bit too early to talk about it because, well, we need to see a breakout through the upper side of this potential flag idea, and then yes, we could go for some of those higher levels. Until then, I mean, it's stuck in here. I mean, it could still continue drifting lower, so don't rush into anything. Yes, on the one hand, the fact that we've managed to remain above the 21-day EMA, that of course gives it a bit of a positive spin, but like I said, a confirmation break is still needed. EURUSD very quickly on this one. Not much is happening, to be honest, guys. I mean, so yeah, I would say just keep an eye on this one for now. Today is not a huge exciting day in terms of economic data releases, so maybe we'll see this one kind of bouncing around here. And to be honest, as long as it stays in this area somewhere, I will remain on the slightly neutral side. For me, for the upside, I need to see a push above the 1.1483 level. For the downside, as I said, a drop below that 1.1235 level is required. So guys, that's it for this session. I really hope you found it useful. Thank you very much for joining in and watching this one till the end. I really appreciate your time, guys, your views, your likes, your comments. I really do. So I really, like I said, big thank you for that. If you want to catch me tomorrow morning, as always, at my Traders Espresso, that's 7 o'clock GMT time. For now, have a wonderful trading day. Stay safe, have your stop losses in place, and everything will be fine. Thank you very much, and bye-bye.